Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Wednesday, November 22nd, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. By the way, we did put out a stock pick on Tuesday, PepsiCo. You might want to check that out. A lot of things going on there. You can see it for free with the 5-day free trial. Let's jump to the weekly chart. Same weekly chart throughout. I do obviously cover the daily chart as well, but the weekly chart provides the big picture analysis. Start with the big picture, work our way into the day itself, just to underscore the fact that the long-term trend remains bullish above 165.07 to 166.48. Channel structures we settled above last May and then retested over the last few months. Following the most recent test, it took about 3 full weeks before we wound up closing above this significant channel top at 185.21, which is our new mid to longer term support, able to contain selling not only through the rest of the year, but through Q1, and above which this long-term objective at 231.60, a long-term objective above the mid-160s, now in reach perhaps by the end of the first quarter. And so that is the big picture. Solid, meaningful support in the mid-180s as we move into December trade. Now I can show you a few charts. We've got this old low area here, this gap area we've closed above, now right back at it. We have the low of the high of 192.65. These are not consequential levels right now. 184.44 is consequential. It is part of that descending channel top that on the weekly chart I showed a moment ago at 185.21. I don't expect to see that area anytime soon unless we close today below 189.98. So 189.98 is your 4, 5, 1 day, 1 week channel bottom, able to contain session weakness, above which we could test 192.84 today, where we could top out for the day. I do like 192.84 because it does coincide a bit with the low of the high back in July. I think that low was 192.65, so I rounded up to 192.84, simple trend line off these highs, able to contain session strength, and if we close above 192.84 today, I do think there's a decent case to be made that by the end of next week, we could reach the 198.23 high from July, where we could double top for a week or so. On the way up, we also have 195.36. I don't expect to see this simple trend line today, but if we do close today above 192.84, we certainly could on Friday reach 195.36, rising daily, likely to contain intraday buying pressures. But once again, after all of this, closing above 192.84, I think does set up a 198.23 objective. I wish I had a horizontal line going across right here where you could actually visualize this as a realistic 3 to 5 day target if we close today above 192.84. So day traders buying 189.98, selling 192.84. 3 to 5 day swing traders selling a settlement below 189.98, back into the mid 180s within 3 to 5 days. 3 to 5 day swing traders going long with a settlement above 192.84, then anticipating 198.23. 198.23 considered a realistic 2 to 3 week target anyway, following the settlement about a week ago above this 184.44 descending channel top, which once again is on the weekly chart at 185.21. closing below 189.98. You can set up for a mid 180s objective by the end of next week, where we could bottom out not only through the rest of the year, but even possibly through all of Q1, as I'm anticipating this 231.60 long-term channel top over the next 3 to 5 months, perhaps holding above 185.21. Now, I can cover the big picture downside. It's not, there's no point in doing it right now, but I will say that if we close below 184.44 over the next week or two, I'm not expecting a complete rout to the downside. I would merely expect 179.51, where we could also bottom out on a weekly basis and perhaps turn up. In other words, as I've been saying, you're bottom picking the mid 180s in anticipation of a good low in this area if tested through the rest of the year and into Q1. And the only scenario in which I want to aggressively play the short side as we move through the rest of December would be a settlement below 179.51, then anticipating a retest of the mid 160s long-term support within 3 to 5 weeks of doing so. So we're buying the mid 180s long-term, and in terms of whether or not we will revisit the mid 160s, that comes into play with a settlement below 179.51. I think that pretty much rounds it out. I don't know if there's anything else that needs to be said for Wednesday's Apple report. I'll keep it at that. I'll leave it at that. Please click like, share, subscribe. Check out wickedstocks.com, and I'll be back actually Wednesday afternoon with Friday's Tesla. We skip a day, of course, this week. Thursday's Thanksgiving. Have a great Thanksgiving with friends and family, and we'll be back with Friday's Apple report. You have a great day.